Hi, welcome to Think Beyond the Keys. I am Melvina Fredson-Cole, your realtor and loan officer. I hope you're having an amazing week this week. And this week, I'm going to speak about the VA home loans part 2. Yes, last week I introduced the VA loan, what is it, and eligibility, and what is the funding fee. And this week, I'm just going to go right through, what lenders need in order for you to take advantage of the VA home loan benefit. I hope all the veterans out there were honored yesterday, and I think we should have a Veterans Week, not only one day. I think that a Veterans Week would be great. But let me get right through it. This is going to be high level, and I don't want to bore you with a lot of details. You can contact me for more information, and I'll be happy to walk you through the whole process and explain everything, because each person's situation is unique. So it's not possible to cover all scenarios in just a quick 20 minutes, 15, 20-minute session. So let's get this started. Now you're a veteran and you decide to take advantage of the benefit. And so what do you do first? Okay, the first thing you do, you make sure you get a realtor and a loan officer, and make sure both of them are talking. And you get them, and this is why. All right, you think you're eligible. What lenders need in order for us to set up the VA loan for you, we need to verify that you are eligible, right? We need that. So what shows us that? It is the certificate of eligibility. That's what makes lenders know. And in there, it shows if you're honorably discharged, all kinds of stuff. It shows what your benefits are, your entitlement is, if you've used it before, how much you have left. So we need that information. Now, if you don't have that, that is okay. It is okay, because we can get that for you, and even faster than you can get it. But what would we need? Great question. If you have been discharged, and what we need from you is a DD-2 14, which is a certificate of discharge, a certificate of release. That's what it is. And if you are still active, we will need an SOS. No, not Save Our Souls, but it's a statement of service from your current commanding officer for your unit. So we will need that. And in addition, obviously, like if you are a reservist or in a guard, we need an NGB, I think 22, NGB form 22. If you have been discharged, we'll need that. But if you're still on active duty, there's no particular form, but we will need a statement of service from your commanding officer, okay? It can be on a letterhead or whatever, but we'll need that. And okay, normally for all home loans, we will need your tax return, 2 years tax return, your W-2 and all that kind of stuff. But in addition, if you are on active duty, we will need an active duty leave and earnings statement, leave and earnings statement from you. So these are the documents that we'll need in order to start the process and see if you qualify. Now, like all loans, obviously, the debt to income ratio, your credit scores, the value of the property all plays into what we can qualify for, right? But the VA loan also has an additional one, and I'll talk to you in a minute. Let's see the debt to income ratio. Now, normally the debt to income ratio is 41%. However, there are instances if it goes above 41%, you may have some outstanding, some other circumstances that we can allow that. For example, for VA loans, and only for VA loans, they have what we call the residual income limit. The residual income limit. Now, what is that? Okay, it means that it is calculated. We take all your credit card payment, your installment payment, car payments, all those kind of stuff, your debt, and we add it to your what's your mortgage will be your principal, interest, insurance, and taxes, what you'll be paying, every month for the mortgage, the amount of money that you're asking for. Now we add those together and then we subtract it from your gross monthly income. Yes, we use the gross monthly income, not the net, the gross monthly income. What is left over is the residual balance, so the residual income. Now VA, they have um, a table of what residual income is, and it depends on the area of the United States. There's a residual income from West, we live in the West, so that's where we are. The East, the North and South, Midwest, the different residual income, obviously, because it's different economy, right? So for California, if the home is equal to and greater than 80,000, which obviously in California it will be, the residual income that you should have after we've deducted all of those should be, I think, $990, and that's for a three-person family. Okay. So the residual income, apart from the area it is, where it also depends on the number of people in your family. So if this is just an example. If there are three, it's $990 residual income, and that's what those are some of the things you have to qualify for. If it's one person, they have the number. If it's two people, they have the number, and that's a residual income, and that's one thing that makes it distinguish it from conventional loans and FHA loans, that residual income. Now, the debt to income ratio is 41%. Sometimes it may go more than that, because another thing that distinguishes the VA loan from the others is child support. If you're paying child expenses, child support, they add it to your debt. Whilst for like FHA and conventional loan, they subtract it. They don't include it in your debt to income ratio, but the VA, they include it in your debt to income ratio. Okay, and so those are some of the things that you may need to know, and that's what we look at. However, they look at the whole picture. The whole picture is looked at, and it's run through the desk underwriting, and sometimes it comes approved with conditions. So you don't disqualify yourself. You never know. There's so many things that can help you qualify for a loan. So the debt to income. Now your credit score, obviously credit score is important. Now the VA does not have a minimum credit score. However, lenders do have minimum credit score because they're lending their money, right? So most lenders, the credit score is around 620, but it depends. It depends on the lenders, and it depends on what how they do their the programs. So you may need to ask that question, like, what is your minimum credit score? For us, we can do 580 credit score for a single family home. So we can go as low as 580 for a credit score. So those are the things that you need to be able, some of the things you need to be able to qualify for a great rate. Your debt to income ratio, your credit score, your residual income. Obviously the value of the property is also important, because if the value of the property is, an appraisal is needed. That's number one, an appraisal is needed. And then after the appraisal does their report and their value, a staff appraiser evaluates it and gives us a notice of, it gives you a notice of value, and that's the value of the property. And if you want like the sale price, the purchase price of the home is like 800,000 and the value comes in at $1 million, that is great, right? Because it values more than the amount you're asking for. And in addition, the VA is guaranteeing you 25% of that. So that will be awesome. However, if it values below, you may have to come up with, a little bit more money, or you may have to negotiate with the seller, either of the two. Now, what kind of properties is qualified for the VA loan? Well, the VA loan, a lot of properties. One thing, a single family, obviously condos, but with condos and townhomes, just to let you know, it has to be approved. There is a list of approved condos, and townhomes, and I've put the link down there in the description box. Yes, I put it down in the description box. And if the area that you want, or the home that you want, the condominium that you want is not there, it's okay. We can request it. But just to let you know that the VA also has minimum property requirements, and the minimum property requirements depend on where you are, the state you are in. Like for here in California, apart from the usual, they don't like seeing peeling paint, they, carbon monoxide, and all that kind of stuff, alarms. In addition to that, in California, they need a clear pest inspection report. So they require a pest inspection report in addition to the usual that they require to make sure the home is safe for you and your family. And it's also to make sure that the home value, that it's worth it, that they're borrowing you the money. So those are the things that are required in a VA loan, and that's just like over the top, and that you need to know. You need to make sure you start speaking with a realtor and a loan officer early before you even start looking for a home. So we have all of these things in place, and it would be sad if you already seen what you want, you already say, yes, I want this home, and then it's a condo, or it doesn't pass inspections, or something goes wrong with it, and you already are in the contracts, you see, and so that, things drag on, and it's not a great experience for everyone. One thing I want to call attention to is the fact that at the beginning of this year, some of the requirements in the VA home loan changed because of an act that was passed called the Blue Water Navy Act of 2019. Yes, it was passed, and just a few things were changed. And one of the things that were changed, which is great for you, is that the VA doesn't have any limits anymore. Yes, they don't. What I mean by that is, like before, the VA loan limit that they are willing to back was in line with the conforming loan limits that's out there, like the FHA that they have, that you can it's 510,000, or for high areas is 700 and something thousand. But now, because of the Blue Water Navy Act, there is no limit. So that is great news, especially for people here in California, because homes can run $1 million really easy. So, however, just know that you have to qualify for it. And number two, most lenders are putting a limit. So there might be some lenders that may put like 2.5 million limit that they will not go over. So even though the VA does not put any more limits on it, but one, you have to qualify it. Obviously, you have to be able to pay for it. And two, it depends on the lender, but there's no limit on that. So that's one change on it. And I also put a link because the Blue Water Navy Act, there was a lot of things that goes on. This is just a little bit of how it affected the VA home loan. And another thing that it affected, which I think is really great for Purple Heart veterans, prior to January 1st, 2020, if you're a Purple Heart veteran and you are still on active duty, you have to pay the funding fee. Yes. However, if you are discharged, then you do not pay the funding fee. So what this act did, it eliminated that. So whether you're discharged or you're on active duty, as long as you're a Purple Heart, the funding fee is waived. And I think that was a really great thing to do. So if you're out there, the funding fee is waived. You don't need to pay that. That's awesome. Also, the funding fee, remember last week I told you the funding fee is charged as a percentage, and it depends on if you're a first-time user, a second-time user, and it also depends if you're putting a little bit of down payment or not. But the funding fee percentage increased by 0.15%. Yes, it increased by 0 point, which was a little bit. It's just to help cover the cost of the program and funding the program. And so those were the things that changed in the Blue Water Navy Act as far as the VA home loan is concerned. Well, major ones as far as the VA home loan is concerned. So I hope this information has been helpful when it comes to VA loans. I forgot to add the part 1 down there, but I'm going to do that right after I'm done. And please, and also subscribe to my YouTube channel at Think Beyond the Keys. And there, that way you won't be missing any videos. You can just go there and go back and look at all the videos that I have done. So it's Thursday. Make it an amazing the rest of the week. And next week I have a holiday special, and I'll be speaking about things during the holidays that you have to watch for as a homeowner and even as a renter. So you don't want to miss that to see what I have in store for you. Have an amazing rest of the week, and I'll catch you next week at Think Beyond the Keys. Take care.